Welcome, everyone, to When and Why a Business Credit Card is a Good Idea. I'm Jerry Detweiler, Education Director for NAB. So, first of all, let's just talk about what a credit card is. I know you're used to using a credit card to pay for items, but essentially, a credit card is a line of credit because a credit card gives you access to the lender or the issuer's money and you can pay them later. So many credit cards have an extensive line of credit that you can pay over a long period of time if you're willing to make minimum payments. Not a great idea, but it's a possibility. And some credit cards require you to make payments more quickly, say in 30 or 60 days. There's even a credit card. Amazon gives you an option for a 90-day payment term on its business credit card. So there's a variety of ways you can access this line of credit. Now, if you pay your credit card in full, chances are you're not going to pay interest and you can take advantage of some excellent rewards. There are also a number of issuers right now that are offering low rate purchases, even 0% for purchases for, say, 12 or 18 months, or balance transfers at 0% for a period of time. So we'll touch on these in this program. So, when should you think about getting a business credit card? Well, one misconception I see is that business owners often think that they have to have their business at a certain level before they get a business credit card. But in fact, many of these cards, not all of them, but many are available to business owners the minute they start their business. So as soon as you start operating your business, whether it's on the side or full time, you may qualify for a business credit card. And we'll talk about those qualifications in a moment. So, when should you get one? Well, first of all, soon. And then think about the use cases where you might find a business credit card helpful. One is that you have business expenses and you want to improve your cash flow. You want to give yourself extra time to pay for those purchases. Even if you pay your credit card off in full each month and it requires monthly payments, you can get almost 2 months of use of the lender or issuer's money without interest by timing a purchase. So if you look at your credit card statement, you'll see the dates that the billing cycle runs. So let's say your billing cycle closes on the 12th of the month. If you make a purchase on the 13th, it won't show up on this month's statement. It'll show up on next month's statement. So you have extra time to pay that. You're using the float of the issuer's money interest free if you pay it in full and have a grace period. So it's an opportunity to improve your cash flow. Now, most credit cards do require good personal credit. So generally you want to at least be in the 650 and above range to get a credit card, even a business credit card. There are just a couple of major business credit card issuers that will just look at business credit and business revenues and won't check personal credit, but most of them will check your personal credit. So heads up on that. Financing a large expense can be a good use of a business credit card. When you have a business credit card, you have that line of credit available. And so you don't have to go and ask for a loan for a specific purchase. You can just make the purchase and then pay it off over time. So you already have access to that line of credit. Of course, you want to make sure you know your interest rate, that you factor that into the purchase, but it can be an excellent way to finance an important purchase. Rewards are a big one, so we'll talk about those in a moment. And then another is to start building your business credit history because many of these cards do report to business credit, as we'll elaborate on in just a moment. So there's a variety of reasons why you may want to consider a business credit card. Now, one of the things I love about business credit cards is that they allow you to separate your business and personal purchases. You can keep those separate. And this is so crucial to running a financially healthy company. We talk a lot at NAB in our presentations about making sure you have a separate business bank account. And I'd also encourage you to use a separate credit card for credit card purchases. I think ideally this would be a business credit card, but if it's not, even dedicating one of your personal credit cards to only business purchases, if that's how you're going to pay for those purchases, would be better than commingling them on the same card. When you commingle them, it's really hard to figure out, okay, what was this purchase for? Was it business? Was it personal? If there's interest charged, you may be able to deduct the interest on a credit card that's used strictly for business purchases, but not if you're mingling it with personal purchases. Same thing with the annual fee. You may be able to deduct that on a business credit card, but probably not if you're using that card for business and personal purchases. So it makes things so much easier at tax time if you can either you're entering it or your accountant or bookkeeper is entering it. If you can say, this is where all my business card purchases are aggregated on this account, it just makes things super simple. And there's also superior fraud protection. When you compare it to other ways your business can pay for purchases, whether that's a check, cash, or a business debit card, the fraud protection on a business credit card is superior. So let's talk about that for just a moment. So, business credit cards fall under the Truth in Lending Act, the Fair Credit Billing Act, and it limits the liability if a card is used for unauthorized purchases to $50, and most issuers don't charge you that $50. That's the same as consumer credit cards. But business debit cards are not covered by the same law that covers consumer debit cards in the case of loss or theft. So, in the case of a business debit card, the money's out of your account and it's been taken by a thief, and you have to work with your financial institution to try to get that money back into your account, to try to get it investigated and get it credited to your account. And that can take some time. And that might be money that you need to pay essential bills. So be very, very careful. If you're going to use a business debit card, please by all means set up alerts so that you can spot unusual activity quickly. You can act quickly if you see that there's some unauthorized use on your business debit card. Again, that's coming right out of the underlying bank account it's associated with. But with a credit card, if someone steals it, it's the issuer's money, not yours. And you can dispute that unauthorized use and hopefully not pay a penny for that fraud. Now, the other reason to think about business credit cards is how they impact your credit. And this is true in both in the case of personal credit as well as in the case of business credit. So, in the case of personal credit, many of the issuers, not all, but many of them don't report the activity to your personal credit unless you default. So as long as you pay the bill on time, it won't show up on your personal credit, impact your personal credit scores. We have a chart that details this at nav.com/reports, and it talks about specific issuer policies. On the flip side, most small business credit cards do help you build business credit. So most of them report to at least one of the major business credit reporting agencies. And we have a chart that illustrates that at nav.com/business dash reports. So you can look at more detail in terms of how these affect your credit reporting. And it's really up to you what makes sense, right? Some people will want to build their personal credit, they'll want that card reported. Others may want to keep it off their credit. Same thing with business credit, help build business credit. Now, one reason I caution business owners about using personal credit for business purchases is that if you do end up with high debt usage or high utilization, that can hurt your credit scores. So, what do I mean by that? Well, on your personal credit, one of the factors is the debt that you're carrying. And here, FICO credit scores, scoring models, as well as Vantage Score, one of the things they look at is the limit on your credit cards or any other revolving lines of credit. Revolving credit is like a credit card where you can borrow what you need, pay it back, borrow again. They compare that to the balance that shows up on your credit report. And if that balance is high, it hurts your credit scores. There's no specific number. A lot of times you'll hear 30% or 50%. It kind of varies depending on everything else in your credit report, but generally, as a rule of thumb, keeping your utilization below 20 to 25% of your available credit is usually a good idea. So if you have a credit card that you're using for a large business purchase and it's going to max out that credit card or even create a high balance, that could hurt your personal credit scores. So that's one reason why you like to keep these separate in many cases. A perfect example of this is many of our NAV customers are in real estate. And if you're in real estate fixing properties to flip them, you have a lot of expenses that go with rehabbing that property. So if you put it on a credit card that doesn't report to your personal credit, you don't worry about those high balances. You rehab the property, you sell it, and then you pay it off. And then you do that again with the next property. And that's one way to help separate your business and personal credit. So keep that in mind. Now, to use business credit cards wisely, you want to use them very strategically. And one way to do that is, first of all, look at introductory offers or welcome offers. You might see these listed as limited time offers. In fact, we've just written an article for the NAV blog about some great credit card welcome offers. What we've seen coming out of the pandemic is that issuers really pulled back on business credit cards and credit cards in general during the pandemic with all the economic uncertainty. But now that the economy looks like it's moving into recovery mode, they're back again marketing and they want to get new customers. They want to be that card first, first in your wallet when you think about paying for a purchase. And so they're offering some very attractive introductory offers. Those could be in the form of a low interest rate, so say 0% interest for 12 to 18 months on new purchases, balance transfers, or both. It could be a reward card that may offer you bonus miles if you spend a certain amount in the first 30, 60, 90 days, or a card that will offer you cash back, higher cash back, especially for early purchases. So there's a variety of ways they may incentivize you to to sign up for that card. Now, you do want to choose a reward card that aligns with your business because if you start looking at cashback cards, what you're going to see is that some of these offers will be tied to specific spending categories. So you will earn bonus points or miles if you spend in certain spending categories. And you want to make sure that really aligns with your business. If you don't have a category that where there's a lot of spend, for example, office supplies or gasoline stations, etc., then you may just want a straightforward cashback card, or maybe you want a travel card. If you're a traveler and you prefer a specific airline, maybe you have status or get points on that airline, then by all means check out the co-branded card for that airline because doing so is usually very rewarding. They'll usually give you a free check bag, priority boarding, you'll get miles, you may get a status upgrade. There's lots of rewards that come with those co-branded cards. So those can be a really good deal. So you have to think through what's most important to your business. And for some businesses, this might be changing. You may have been on the road all the time pre-pandemic, but now that you realize you can work over, video conferencing or on the phone or online, you may pull back on travel and suddenly that travel card that you had may just not be as valuable as say a cashback card. So you really want to think about where your business spends its money. And then also consider high balance transfers to help consolidate debt. So if you get a 0% offer, here's the way I love to approach it. You use that card to consolidate that debt. You hopefully avoid other purchases on the card. And then you take the amount you transferred and divide it by the period of the 0% offer. So let's say you take, I don't know, you have a $10,000 balance transfer and you are going to take that and you're going to transfer that at 0% for a year. So then you put on auto pay $834 a month so that when that year is up and the 0% is over, you've paid it off. So that's one way to think about using a balance transfer offer to your advantage. If you don't pay it off by the time the balance transfer ends, any remaining balance will be charged a higher interest rate, which probably is considerably higher. So you do want to make sure you prepare for that properly. So how do you shop for a credit card? Well, it can be a little bit of work, but I do think the rewards or the benefits can make it worth it to spend some time making sure that you have the right card. And I know when I've done this in the past, and sometimes I've been better about it than other times, I've really come up with some great rewards credit cards that have earned me some excellent benefits, in my case, travel, that have been well worth the time that I put into shopping. So don't be afraid to spend a little bit of time looking around. Now, if you're going to carry a balance, either periodically, maybe you have a seasonal business, or if you know you have to some balances you want to pay off, then the APR, the interest rate, is going to be very, very important to you. So you're going to need to understand that and understand what the purchase rate is, what any introductory rate is, and what the penalty rate is. So if you missed a payment, how high would your interest rate go up? Look at the fees. So annual fee is a big one. Now, sometimes it pays to pay a high annual fee. I have a credit card that has a very high annual fee, but the benefits that I earn from it make it worthwhile for me in my current situation. Last year, I wasn't quite so sure because I wasn't traveling with the pandemic. So I wasn't quite so sure, but I held on to it. And now I'm glad I did because I've got a lot of points that hopefully, as travel opens up, I can take advantage of. So you need to look at those fees and make sure you understand what the cost is. Rewards, again, if you're going to pay in full, rewards are where you're probably going to focus your shopping effort. And that could be cashback rewards or travel rewards. And start your search by looking at anything that's directly tied to companies that you have a strong loyalty to. So if you always stay at Hilton properties or you always stay at Marriott properties, you should look at their co-branded cards. If you're more neutral and you just shop for the best deal no matter what, then you're going to look at a card like something like one of the Amex travel cards or Chase Ultimate Rewards cards that are more flexible and that can get you benefits no matter where you travel. Now, one tip is that if you have a NAB account and you can sign up for free, you can find matches based on your qualifications in our marketplace. And NAB's Matchfactor, our results have shown that our customers who use Matchfactor to find a business credit card are 3.5 times more likely to be approved. Now, these are not full guaranteed approvals. So when you're looking at it, you're looking at what factors you match with that card. But the lender's still gonna, the issuer's still gonna do their underwriting. So it's not a guaranteed approval, but it will help you narrow to cards that are a good fit. And if you see cards with a low match factor, you know you're probably not going to qualify, and you can move on to evaluate cards where you have a high match factor. Now, I do realize that some of you may not have great credit. And if that's the case, you may need to work on your credit in the meantime. There are only a handful, and not even a handful, only a few uh, business secured credit cards. So that's not a particularly um, big option right now. It's something you can check out. But if you can work on your personal credit, say with a personal secured credit card, many of these issuers will base the decision based on your personal credit. And so as your personal credit scores go up, then you'll have more options when it comes to a business credit card as well. So just going through those qualifications again, most issuers are going to check personal credit. Usually they make the decision based on personal credit. Just a couple will look at business credit or won't do a personal credit check. Income, they typically will consider income from all sources, not just the business. There's a couple of cards that do look at the income of the business. Most of them are looking at income just generally. So if you still have a day job, or even if you have a spouse or partner who would help, pitch in and pay the bills out of their salary if things were tight, then that could be listed on the application. There's just very few, but there are a few issuers that do require your business be incorporated, so LLC, S corp, or C corp. And due to anti-money laundering regulations, you may find that anyone with 25% or greater ownership has to provide personal information on the application. Doesn't mean there will be a personal credit check for that person, but they will have to provide details to make sure that they're a real person and it's not, again, a money laundering type situation or a fraud situation. So, the best practices. So, when you are thinking about a small business credit card, the number one thing you can do is try to charge what you can afford and pay in full whenever possible. And I know this sounds very obvious, but the advantage of a business credit card, the fact that you have this line of credit that's available to you when you need it, is also a bit of a disadvantage because it means no one's going to second guess how you're spending that money. No one's going to say, "Well, did you really need to buy those, those business cards, or could you have had something simpler? Or did you really need that, you know, MacBook Pro, or could you have made do with something cheaper?" So it's kind of a two-edged sword there. So you really want to be careful about your purchases when you're using the credit card. Always make sure you understand the interest rates and watch your due dates. And I recommend you set reminders and alerts. So most of these cards are going to let you set up text message alerts or email alerts if you go over a certain amount of purchases. If you have a payment due, when a payment is credited, etc., take advantage of those, because I can tell you, you are, as a business owner, you're going to get really busy at times. Things will happen and you will forget about what that bill that needs to be paid, or you won't be paying attention and something will come up. I interviewed a business owner for a story where she was going out for a day with a client. She used her business debit card at a skimmer at a gas station. There was a skimmer attached. Someone wiped out her business bank account. She was getting notices, but she just wasn't even paying attention because she was off with this client. You need to set it up and then don't forget it, but pay attention so that if something unusual comes up, that you will take care of it. You have to, one tip with a business credit card is that unlike consumer credit cards, the issuers typically retain the right to raise the interest rate at any time and for at any time you're late. So even if you're just a few hours late with your payment, your interest rate could go up to what's called the default rate, which is or the penalty rate, which is much higher. So you do want to make sure, I like to set minimum payments on auto pay so that at least I know on every single one of my credit cards, no matter what happens, that minimum payment will be made. I won't be late and I won't trigger, a late fee and potentially an interest rate hike on a business credit card. Now, also be careful when giving cards to others. So some of you will have a business partner or employees and you'll give a card to them. If they use it for things that you don't approve of, that doesn't mean it's unauthorized use. The fraud protection applies to unauthorized use. But once you give a card to somebody, you've authorized them to use the card. And it doesn't matter if you approve of the specific purchase or not, it's authorized. It's not fraud anymore. So you have to make sure that you're monitoring that use and being very careful and strategic about that as well. I once received a call from a business owner. He had given cards to his employees to fill up the gas in their car or their truck before they went out on their jobs in the morning. And he had an employee who charged $2,000 that day, not in gas, and something else, and then never came back to work. And the issue, when he tried to dispute it with the issuer said that's not fraudulent use. And the issuer was right. It was this employee was authorized to use the card. So you want to be careful. Some cards do let you have spending control over employee cards, and some get very, very detailed about that. Divvy in particular is one that really goes into detail with a dashboard where you could assign a credit limit for a conference, for example, for an employee. And then finally, do a review once a year. Once a year, take the time to say, hey, is this card the best card for me? Because you will find sometimes that the card that you're using maybe doesn't have as rich a rewards. Maybe they've raised the annual fee, or maybe you just don't want those rewards anymore. Maybe you aren't traveling. Now you want cash back. Or maybe you aren't using that particular travel provider and you want to switch to a card that offers more general rewards. So take a look at that each year so that you can make sure that you still have the best card in your wallet. Now let's give you some tips for getting started. So you can start by comparing credit cards at nav.com/business-credit-cards. So that's a large article with lots of different resources in it related to credit card, include many of the things we've talked about today. And then when you sign up for NAV, you can get matched to cards for free right in your dashboard. So you can see what the matches are and you can narrow your search for choosing a credit card based on what matches are showing up. and then continue to review that as your business grows. That's something you want to look at periodically. And I should add to this list, keep your eye out for welcome offers, because there can be some really appealing welcome offers that might finally entice you to switch over credit cards. I know it's a bit of a hassle to switch credit cards, but sometimes the welcome offer makes it worth it. And so you can choose a card that would be truly rewarding for you. I hope you found this helpful. Let's see if we have any questions. So we have a question. I applied and was approved for a particular card, and then they told me they needed my business bank account for ACH payments of the monthly bill. And I wasn't sure if this was common. So it's not common for most cards to require that you make ACH payments on a credit card. And I don't know which card you're talking about. So if your spidey sense is saying something's off, I would definitely investigate a little bit further. And maybe this is a card that was for someone who might not be, I don't know, that might be credit challenged or something. Um, there are some financial providers that will offer discounts for setting up automatic payments, but I haven't seen that as a requirement. And given the fact that most credit cards already facilitate online payments, I would find that to be unusual for a requirement. An option, yes. A requirement, no. So I would just check at what the card is. It is possible that credit card does require ACH payments. And if that's the case, as long as you see it secure and the lender is reputable, then that would be fine. I certainly make all my credit card payments automatically using ACH, but you do want to be careful if it doesn't seem like it's something that's right. Okay, so it turns out you refused to disclose that info and told them to close the account. Okay, well, then you made the right decision for you based on your situation. All right. Well, if we don't have any other live questions today, we will answer questions on the NAV blog. So when you look at that article that we put up there, nav.com/business-credit cards, or any of our NAV blog articles, we answer questions, and we're happy to do that going forward. Be sure you check out our other webinars and lots of topics, including startup financing, how to build business credit, how to use trade credit, how to work on your personal credit as an entrepreneur, and hopefully you'll find those all helpful on your journey to growing your business. We wish you the best of success, and we'll see you in our next webinar.